Welcome, guys, to another video purposes trade. And here I want to talk about something related to trading. I know I made a lot of random videos recently, but I wanted to get back into trading and just talk about something related to leveraged position. So I made a video about this in the past. If you guys haven't, please watch it, where I talk about what a leveraged position is. And basically, you're trying to multiply your gains while also multiplying your risk, right? And yeah, the way you do it is by borrowing money in the simplest sense, using margin to trade, right? And I'm not going to get into detail about that in that video. In this video, talked about this in another video. You guys can go and watch if you want. But here I want to focus on why it's risky to hold a leveraged position over the weekend. And I'll give you a simple example of what happened to me. So this was just after Trump became elected. I took up a position that was against the Canadian dollar and for the US dollar. So I basically shorted the US dollar, shorted the Canadian dollar and went long the US dollar. So yeah, the USD CAD pair for one USD, how many Canadian dollar you're gonna get? I expected you're gonna get more and more Canadian dollars. I basically went long on that position. And it was actually a good trade, I'm not gonna lie. But the mistake I made it was holding it over the weekend because here's the thing, guys. A lot of stuff can happen over the weekend. Okay, that's so the trading ends on Friday, Saturday, no trading. An event can happen, but there's no one to trade on that event. Sunday, another event can happen, multiple events regarding that financial instrument that you're trying to trade. But you can't trade, the markets are closed. And so all these events pile up for 2 days straight, right? And so when the market opens on Monday, the market has to correct, right? The market now has to price in all the events that happened in the last 2 days. In in the normal case, when an event happens and the market open, it can easily price in the event instantly. But because the markets are closed over the weekend, they have to wait until the market opens to price in the event. So that's where the volatility comes from. And if you have a leveraged position on a margin, and you know, if it's a 500x leverage, 1% decline in the position means a 500% decline. So you need to have 500% of the margin, or your position is going to get closed right away when the market opens on Monday. That's just a simple way to think about it. And yeah, so that's the big problem with holding a leverage position overnight because a lot of events happen and that creates a lot of volatility. And if your leverage position is very high, if it's like 500x or something like that, you're gonna get a margin call and likely your position's gonna get sold out the moment the market opens. So yeah, I had a good position going long the USD CAD. So basically for one USD, how many Canadian dollar you could get. It was a good position, but I couldn't hold it over the weekend because the moment the market opened on Monday, some bad news was there regarding the US dollar over the weekend. And yeah, so there was some good news on the CAD, and that was enough to close the position, even though USD CAD went on to rise over the next week. But because the weekend's events were not getting priced in instantly into the market because the market was closed, that's led to a sudden price change, significant price change on Monday that closed the position. And if you still want to hold a position over the weekend, just understand that um, in general, markets tend to move upward on Monday and tend to move downward on Fridays in general. And if you're trying to hold a short position over the weekend, it's extremely risky because you're going against historical pattern. Because more likely than not, the market's gonna open on the upper side. Obviously, the USD CAD pair was a different thing because there you have two instruments, financial instruments, US dollar and Canadian dollar, and you're trading two instruments in one. So that's why it's a different case. But in general, if it's a stock, a commodity, whatever, in general, those kind of single financial instrument, they tend to go higher on Mondays and they tend to go lower on Fridays. So if you hold a short position over the weekend, it's you're more likely than not gonna be getting a margin call. And yeah, so just understand that if you have to hold a position, make sure it's a long position on a single financial instrument, not any currency pair, currency swap, because that's problematic. And yeah, so what else? I mean, obviously the funding depends on the funding rate. If there's a weekend funding rate, that's also an issue, right? So that's a different thing. But other than that, I mean, honestly, look, you have to understand how the market works. Most people don't hold a position over the weekend. They start trading on Mondays, they'll open positions on Mondays, and they'll close them by Friday. And so that's why they buy up their positions on Monday, markets go up. They want to close their positions on by Friday, the markets go down. That's usually the general trend. And yeah, so if you understand that, that's good enough. But yeah, just wanted to talk about that.